Hello, in this video I'm going to explain to you what a candle chart is, how to read a candle chart, and why this red candle here, suddenly becomes a green candle when you change it to hollow. All of that coming up. So here we have what is a standard candle. Now a candle is a given period of time, so it's the set of movements over a given period of time. So if you set your chart to say 1 minute, then all of your candles will signify 1 minute or 1 day, and each candle will signify 1 day. And what they indicate is, so if you look at this candle here, a green candle indicates that the price has gone up over that given period. So this one here, for example, we are saying that this given period of time, and from now on I'm going to use 1 day just to make this simpler. So this particular candle day, it started, the market opened at 102. At some point during the day, the lowest that price has gone to is 101. The highest that it's gone to is 106. And at the end of the day, when the market closed, or when this particular time period closed, the price ended at 105. So just to kind of give you an idea of how that might look on a line graph. So at some point the price had started at 102, it dropped down to 101, it's climbed up to 106, and it finished at 105. Now obviously it doesn't necessarily need to be as direct as this. It could have started at 102, jumped up to 106, dropped down to 101, then set back up to 105. It could have done any of those variables in between. All that we know from that candle is that the start price, it came in at 102, it ended at 105, and between that particular point, the lowest it's been is 101, and the highest it's been is 106. So that's how a green candle looks, and that's how that is displayed. So let's look at the same candle, but if it was in red. And all you do here literally is just flip it into reverse if it's red. So it started at 105. It starts at the top of your red candle. So the black bits here are called wicks, and the body, the coloured part, is the body of the candle. So the wick will show you the highest and lowest point during that time period, and the body of the candle will tell you the start and the end date. Okay, so the start date of a green candle is at the bottom because you know it's a green day, so it's gone up, and the end point for a red candle is down because red is bad. So it means that you've started at the top of the body at 105 and you've ended at 102. And between that period, you've fluctuated again exactly the same as the last one, this green candle. We've gone between 106 and 101. And the same again, the price has fluctuated between 106 and 101. So just to look at that in a line form again, just to kind of go through it again. So we've got 105 as your start. It's peaked up at 106, it's dropped down to 101, and then recovered to 102. Okay, and again, like I say, this is all kind of fluctuations in between. So we've started at 105, that's the only given thing that we know for certain. We know for certain that it ended at 102, and in between it could have done anything at all, but we know that it did not go higher than 106, and it did not go lower than 101. So just to put that into more of a live example so you can see how this works in practice, here is a daily chart for the company square. Now obviously you can see all these candles here. So for example, on this particular day, we know because it's a green candle that the price has opened here, and it has at some point during the day dropped down to this price, climbed up to this price up here, and it has finished the day on this point here. And so obviously, like for today, so far today, we can see that the share price when the market was closed has jumped up significantly, and it's opened at this price, Currently, it's up here. As you can see, this is still intraday, so this candle is still actually moving. And so far during this day, the price has dropped down to this point, it's climbed up to this point, and it is currently sitting on 249.67. So that's how that candle works. Obviously, we can see the opposite being true over here with the red candle. Obviously, we see because it's red, we know it started at the top, so it's opened up here, it's travelled up, it's travelled down, and it's ended at this point here. Now, the problem with this kind of candle method is there's no correlation to the previous day. So, for example, at this particular time period here, what we can see is that the share price has opened here, it's climbed up here, and then the next day, when the market's closed, the price has dropped significantly so that it's actually opened lower than the previous day. And the share price has ended up higher than it closed. It's closed higher than it opened. However, it's still lower than the previous day. So it's a green candle because during that day, that's what happened. However, if you'd purchased the stock on this particular day, if you were just relying on the colour of the candle, you would see a green candle, but your finance would be in the red because you would have lost money because the share price has dropped. So that's why a lot of people use this other method, the hollow candles, which we're going to look at in just a second, because they help to give you a little bit more of a inclination to the previous close and how the share price has performed. So let's get into that now then. So with hollow candles, there's now two elements. So previously we've just had a red or a green candle, whereas hollow candles we have four elements because we have it red or green, but we also have whether it's filled or empty. Okay, so for example, obviously here we've got a filled red candle, a filled green candle, an empty green candle, and an empty red candle. Now the difference with that is that the filled candles are effectively what we've just seen as red candles. Okay, so on the traditional candle chart that we were looking at just here, any red candle that we see on here, if you then flip over to hollow, will be a filled candle. Okay, so for example, these two candles here, both of them are red, and when we go over to hollow candle, both of them are filled, it's just one's green and one's red. So the colour of the candle changes with regards to when it's a hollow candle, and whether it's coloured in or hollow goes back to our traditional red and green that we have with the traditional candle method. So a hollow candle means that we have started at the bottom and we have finished at the top, whereas a filled candle means that we've started at the top and we've finished at the bottom. Okay, so you can see here in this candle here, we've started here, we've finished here, and the same with this one. Even though it's green, we've started here and we've finished here. So this is the closing price on this particular day. Remember, when we see the candles here, look, this is what we know from the traditional candles that we were just looking at. Okay, so then when we flip, see, and we've got this is the closing price. So then we have what makes the colour of the candle. And what makes the colour is the closing price and whether that is greater or less than the previous closing price. So for example, with our example here that we've got, we know that because these are both complete full candles, they're not hollow, they're full. So we know both of these started at the top and closed at the bottom. Okay, started here and closed at the bottom. However, because of the closing price of this one, because this is higher than this one becomes a green candle. If this one had closed just slightly lower down here, this would have been a red candle. Okay, and it's the same is true on the other side. So this one here, because it's a hollow candle, we know that it started here and it closed up here. But because this close is still lower than the close up here, that's why that is a red candle. So remember, back when these are full candles, this would have been a green one. Okay, it closed here, it opened here rather, and closed up here. So for the day, it closed up, and that is why that's a green candle. However, because of the fact that the close is still lower than the previous one, when we change it to a hollow candle, that becomes a red candle. Okay, like so. So, in summary, the hollow candle means that it starts at the bottom and finishes at the top. Okay, so our hollow candle means that for the day, or that time period, it was a positive ending. A full candle means that it's a negative ending for that particular period of time. Okay, whereas the colour indicates whether it is higher or lower than the previous close. Yeah, so a lower close from the previous day is a red candle, and a higher close from the previous day is a green candle. Yeah, so that's why on like this particular example, yeah, if we'd held the stock here and we'd bought it at market close on that day and we still held it at market close the next day, we would be up. Okay, so it's a better day, hence we've got a green candle. Whereas obviously with the normal candle system, we've got a red day because it's closed that day lower than it opened. So it's a red candle on the standard system, whereas it's a hollow candle, a green candle on the hollow candle system. I hope that makes sense. You may need to watch this a couple of times. If still not making sense to you, if you Google it, there's a page on Investopedia, I think, that has the full description again. Might make a bit more sense if this has been a bit too rambly for you. Thanks for watching, and I'll see you in the next video.